time to move on to our panel. So I'd like to invite Eugiena, Andy, and Yina to please come sit up, whichever chair is fine. Excuse me. Okay, so I'm really excited to have them here because we're just going to cover a number of interesting topics, and rather than just diving straight into introductions, I'm going to dive straight into questions, and I'm sure you'll introduce yourselves as you go. This panel's all about going from startup to scale up, and that's part of both. The purpose of Next Chapter is helping founders kind of find that commercialization, find that confidence in fundraising. But the whole scale up kind of emphasis is part of the whole festival this week. So that's why we really wanted to put a panel around that. And I'd like to start with Eugiena, because we often think of scaling up. Fundraising is always something focused on equity fundraising, right? But I'd like to really broaden the conversation there. So I'm going to kind of start with you to talk about your role at HSBC Global Business Banking. The recently launched RAW program, which was, really exciting, very successful. The newly launched $1 billion entrepreneur fund for female founders that's looking at capital sources for women in a different way. So I'd love for you to explain a bit about your role and also the role and work of RAW and the Entrepreneurs Fund.
Yeah, happy to. So, hi everyone. As Nicole said, I'm Eugiena, and I'm from HSBC. My role at the bank is actually one that's really, for me, it's been a real pleasure to be able to bring something that I feel very strongly about into my daily role in this giant organisation. So my role is to look after people and customer engagement. So it's a strange title, but what it is I get to be really involved in helping our frontline colleagues, our colleagues across the network all over the world, so 19 markets, as well as our customers, and come up with ways in which we can engage our customers in something other than just straight banking. And coming into the role, felt very strongly about how can we do this for female founders, female entrepreneurs in particular. So it all came about because a couple of years ago, the bank, actually the private banking part, so to Christina's family offices part of the world, the private bank part of HSBC put out this report called She's the Business, and it looked at the challenges and barriers that female founders faced disproportionately to their male peers when they were scaling their businesses. And this report had 4 major findings from it. It was these 4 barriers, and it just made sense to us as, okay, so a few of our colleagues who felt very strongly about this was great. We've identified the problem, we've got it on paper. What can we do about this now? And from there, the idea of the HSBC RAW program was born to be able to really try to tackle each of those 4 barriers that the report identified. So this report said that things that were stopping women or disproportionately affecting women in scaling their businesses, number 1, access to networks. Very, one that I think everyone relates to is how do you have the right contacts? How do you know who to go to? How do you really create that reach that you're looking for? Number 2 was access to role models. Unfortunately, we often see that the entrepreneur landscape, the media, is often quite dominated by male voices. And how do we give the women founders more access to women like them who have done it, who have had these incredible stories? Because they're out there, we know them. I'm sure all of the women in this room could at least name 5 or so incredible female business leaders at the top of their head. So then the next thing was bias from investors, which is something that I know is really key to Next Chapter raise, and how do we overcome that? And that's things that are probably sort of more unconscious, I would say, around sort of promotion versus prevention language, but also just sort of generally, again, leading back to access and networks. And the final thing was financial knowledge. So we created this program to be able to really hit off all 4 of those barriers. We started with a very small pilot in 2021, and then this year we were able to take it to many more. So we went to, I think in the end, 9 different markets for the HSBC RAW program, so taking it beyond Hong Kong. So that's been a real sort of, I guess, pleasure of being able to lead with your purpose in a giant organisation and do so in a way that hopefully brings about meaningful experiences for our customers. And then alongside that, we were able to really get some help from colleagues right across the bank to be able to pull together a female entrepreneur fund. And that's a debt fund, so it's loans. And in simple terms, what it means is that we will ring fence this amount of money to exclusively for female-led businesses and female founders. And what that means from a bank's perspective is that we're saying, well, we need to go out there. We need to actively go out there and speak to women-led businesses and say, we're open for business. Come speak to us. Come talk to us. Obviously, there's many ways to get financing, but I think it's really key that we make it accessible to understand the full financial spectrum of starting a business. It isn't just one thing or another. It's, in fact, it's like a whole playing card set of different ones that you'll need to pull at different times. So for that, being able to pull that together, really make a big, bold stand about it. And again, the reception has been really positive, where we're seeing the demand is there and customers coming to us, and it just sort of shows that, okay, we weren't this wasn't in our heads. We really felt there was a need here, and we're going to do something about it.
Thank you. I mean, I love the fact that as you said, you've led with purpose. I mean, that's just so meaningful, and that you've ring-fenced for women and said, because part of this is actively, it's a bit of give and take here. So really pleased to hear that. I like now Yina from Saltagen Ventures is a founding member and a principal there. So coming back to the equity play, can you tell us about your work at Saltagen Ventures? What type of investor are you in Saltagen Ventures? And what's quite interesting, it's a global VC in terms of you do invest in many countries. I mean, just share, what's the difference you see between founders between different countries?
Yeah, sure. So I'm a principal of Saltagen Ventures, and we invest globally. So our investment mandate is more around the deep technology side, where focuses a lot on research and development. So, the latest mandate of us is basically to invest in, around medical health technology, digital health, and then also nanotechnology and sustainable food agriculture technology as well. So when you talk about what kind of things we do, we actively reach out to the founders and then building communities and building the resources that founders need. So we don't actually just give them equity or give them money to play. So it's a lot similar to HSBC, where it's more like a supporting partner that we see ourselves to the companies. So we basically, for example, there are some companies that we invest globally, and everyone know that in Asia we have a role to play, and that's why our team is also based in Asia, in Hong Kong. Here is that we help them to explore Asian market and also explore the advantage, the unique resources that we have here to help them tap into this market. So, for example, like manufacturing line, and then, to be honest, it really does get a lot more difficult right now with COVID. So the manufacturing, the supply line has been disrupted a little bit for a lot of founders that we invested in. But then, because they have an investor like us here in Hong Kong, then we can help them to seek, what are the alternatives, or, how are the ways there to help. And then apart from all these things that we do, so if you ask me what are the differences between founders globally, or especially since we're in Hong Kong, so what are the differences as in founder in Hong Kong and founder overseas, which we mostly invest in Canada and the States. So in Hong Kong, it's a very interesting or somehow weird ecosystem where we have a lot of later stage funding. But then we don't really have a lot of early stage funding to incubate company, to work with company to go from angel pre-seed to seed, but we have quite abundant funding in the PE side, so all the way from Series C onwards. So and the noise to signal ratio is really difficult for investor to find good deals here in Hong Kong as well. So a lot of investors also go overseas, and then the founders which are different. For both sides is that the financial knowledge and then the fundraising knowledge of Hong Kong founders in general, they are not really they're not really as sophisticated as those that we see in overseas. So in the early stage, they definitely see a lot of difficulties when they face institutional funding or when they face VC where we face a company overseas, and then we invest in companies overseas, and everyone is at a pretty sophisticated language, fundraising language, where Hong Kong companies would definitely show disadvantage compared to that, because our early stage fundraising ecosystem or like value chain isn't here. Yeah, so that's why they would need a lot of practices, and not until they are in their later stage, then they understand, what are the language there to use, and then what are the things there to really talk to. So I think this is really like makes a big difference, for founders on both sides of the world.
I like the language, and we often talk about this in Next Chapter Race. It's like going to the restaurant. You need the menu in another language, right? I mean, if you're not fundraising as a business, you do not know the terminology, you don't know the process. It's kind of okay to not know that, but it is about how do you get up to speed, how do you learn. And I know that's why we actually do a lot of, in addition to things like pitch review coaching, we do financial coaching, and we're talking about, from the investor's perspective, okay, what are the numbers you should be thinking about? How are you presenting yourself? I mean, always putting on the investor hat is so important. So kind of linking into that is Andy from Sprout. Now, Andy and I met for the first time today after being on multiple panels together over the past 2 years. So it was a real pleasure. And so I'm so pleased that you're here to share your experiences and really to share about Sprout, because kind of going into this early stage fundraising opportunities, and as businesses are scaling up, what you're doing at Sprout is really one of those key components of supporting businesses to scale up.
Yeah, absolutely. Thank you for having me. Honored to be here. Just a quick introduction. I've been in Asia for about 20 plus years. I've been part of the sort of genesis story of Sprout is my co-founder and I have been typically people that Silicon Valley would hire to run businesses out here. I can tell you a bunch of Uber stories later if you're curious. But we saw a big service gap around ownership, specifically around managing equity. And so about 3 years ago, we started building right before the pandemic, and then we launched in the middle of a pandemic to help companies better manage their shares, and all the different components like employee share options and things like that. But we also did not expect was this knowledge gap. And this knowledge gap was much wider than the service gap that we saw coming out of the U.S. So in the U.S., you would see dozens of players, providing software to help manage this information, and it wasn't enough. And it goes beyond gender. It was just a lack of knowledge of how do you do fundraise, how do you structure your company, how much equity to give people, how much money should you raise, how much dilution should you run into, and then it turns into this kind of virtuous cycle where you're growing your team, you're raising money, and then you're hiring people. And then people came to us and said, I don't know much about employee share options. I think I need to do that and empower people. And we said, absolutely. So Tony and I are big, one of our big drivers to create Sprout was to really level the playing field, not only across regions, between North Asia, Southeast Asia, Western Hemisphere, Europe, but of course across genders as well, because there is a disparity in terms of equity ownership, at male, female, and at different levels and in different regions. So we wanted to be part of that movement to kind of empower teams. And so in doing so in a couple of years, we also realized that there was a bigger problem actually brewing in the crypto and blockchain space, where even though everything is written into the blockchain, a lot of information on ownership wasn't that accessible. And so we said, let's be the first to offer both token management alongside equity management. And so a couple months ago, we launched Folium to really go side by side with entrepreneurs in crypto and blockchain, particularly those that have their own tokens, and particularly those that are giving tokens to their employees or investors. And it's become a really interesting opportunity to see ownership go beyond equity and into tokens, and seeing that impact also from the investor side and other stakeholders like employees and and all the people in the ecosystem. So it's been really fun for us. We also have been mentors at a lot of accelerators. So it's kind of, I've turned like a hobby into something I really enjoy, which is helping a lot of founders and entrepreneurs, regardless of gender, just really trying to empower and educate. And so you can think of us as a bit of software plus services. So I'll pause there, but it's been fun.
Well, and you've also successfully fundraised, so congratulations over the past couple of months, which is great.
I would also say that a third of our funding is actually not from equity investments. And so we have received a lot of government support from Hong Kong, as well as HSBC. Thank you. We're also a customer. But we participated in the SME loan. We participated in a lot of the grants. And so part of my conversation with a lot of founders is exactly what you were saying, Nicole, is just be creative.
Yeah.
And also you mentioned, there's a lot of different ways to get money, and it really depends on the timing, right? And so as a founder, you really have to expose yourself to, to all the different, grants out there. There's a lot of money out there.
Yeah, I mean, and that's kind of the reason I started Next Chapter, I feel, was what stage of business are you at? What can you use to grow? Because I think we all get caught up in an equity play, which is definitely an option, but there's other options out there, and being creative as possible and leveraging, but it's hard to find. So that's why, one of the things, we have a funding calendar, and we just search for grants and pitch events. That if you go to our website, you can find stuff. We're scouring, because the easier we can make it for everyone, the better. So, and one of the reasons, really supportive of Sprout is, as we're building businesses to scale up, culture is really important. And part of that's how we work with employees as we bring them on. And I know we're going to hear from Bianca and Winnie how, deploying money once you fundraise, but we hear some horrible stories about cultures in startups. And, let's think about, how do we start with the right culture, building the right team from day one? And that's how we, compensate and engage and be transparent. I think that's all really important. So that's why I think what Sprout's doing is a tool, a tool and a philosophy really that's part of that. So that's why I'm always, very eager to share the Sprout story. So I want to just, with Eugiena, you've talked about HSBC, you've talked about Raw, and I mean, what type of, objectives, or what do you hope to see coming out of things like Raw and with the women coming through the program? Where do you you've already been running it for a while now, so.
Yeah, so we had the first pilot last year and learned a lot from them. So it was much smaller scale, but now we're just coming to the conclusion of the first sort of, I guess, real full-length Raw program for the year. We're taking it into a different approach going forward, because we, as the topic of today is, it's all about scalability. So for us, it's like, how can we make this a bit more all-encompassing and maybe allow more people to come through and benefit from the program? So that's sort of, I guess, future state. But from sort of an outcomes perspective, we do have set KPIs and things, of course, as any program, particularly if you're asking to do something inside an organisation. If you need that support, you have to put some KPIs on the paper. But I guess from my point of view, as someone, sort of a part of the core team of it, is it's the feedback. And I know that sounds sometimes a little bit cheesy, but if someone has come and said, I've learnt this, or this has meant a lot to me, or that contact that you gave me from there has then allowed me to go and do X, Y, Z, for me, that's really meaningful. And I sort of, I guess, look at things from the big picture, but for me, it's the little picture that sort of gives me that get up and go and trying to do better. And really help out as much as we can.
Yeah, that sounds like building product market fit. We've been working with a number of companies like that. It's iteration,
It is
iteration,
definitely a lot of iteration.
research, feedback. You know, I
Yes.
mean, that's a positive thing.
There's a lot of that, trust me.
So, in your role with investing, I mean, what do you suggest businesses do if they want to go from that seed stage funding kind of point to institutional funding? I mean, what kind of can help them make that leap?
So going from a seed stage funding to institutional funding, or going from like angel to actually seed round, it's a lot. It's a big leap for a lot of the companies. So what do I suggest, for the companies that can really do so? Continuing from our last point was that first of all, like financial literacy or like fundraising literacy is really something that makes the difference because for angel investor. For individual investor, it's they might have a similar understanding with you, right? So that they don't necessarily require the same level of languages. A safe could actually just pass by because it's like 2 pages of documents. It's so easy to handle. No one needs a lawyer. But then for institutional investor, they have their own LPs, they have their own mandate, and then they have their own own due diligence process. So I think a lot of startups didn't even actually know that they would need to prepare a data room, right? So they don't even know how to prepare a data room. And then if you find information online, there are a lot of different sets of answers. So actually, for a lot of startups, like they don't quite understand how to do it. And then when they're talking, when they're preparing the fundraising process, they might not necessarily be confident enough to face the questions that are thrown out by the investors, just because there are a lot of jargons that actually we use in terms of fundraising. So whenever we talk about valuation, it's usually pointing to pre-valuation, and then pre-post valuation, these kind of things. I already to us it's like daily languages, but then to a startup who just started fundraising, or who jumping from individual investor to institutional investor, they might be shocking a little bit. And then for all those tag along, these kind of financial terms, it might seem shocking a little bit. And so a lot of startups, they are like, oh, how do I negotiate all this with with the institutional investor? And sometimes you need a good lawyer, and a good lawyer doesn't necessarily means that they just help you review the paper, but actually they turn into the language that you understand and teach you, sort of educate you how to do the commercial decision. And sometimes a bad lawyer do just tell you, oh, it's commercial decision, and then throw the ball back to you. So I think this is really what you need to prepare is it's like growing up from a kid to an adult. So a lot of things have to be a lot more organized, matured, have to be a lot more formalized with the process, and then how to actually negotiate with an investor in a mature language. Sometimes it's also quite different. So because they get used to a very casual interaction with an angel. But then when it comes to an institutional investor, how do you maintain that investor relationship? How to build up your pipeline, your how do you manage some sophisticated overseas startup that we see, they actually use CRM to track their investment pipeline and fundraising process. And so there are actually a lot of ways to do all these. So fundraising itself, I always say it could be a course alone. So it's a lot to learn to get that institutional fundraising.
Yeah, absolutely. I mean, one of the tools we have is the CRM for investors, because it's absolutely true. I mean, you've got to think about warming up, and I was going to ask you, I mean, how long do you think in advance people need to think about fundraisings? It always seems to take longer than.
Oh yeah, it actually takes at least months. So I always say if you expect yourself you don't always want to be put in the position where your runway is running out, is drying up. And then, so then the negotiation, the bargaining power, it then turns around the table. So it became investor could actually tell you, oh, your runway is drying up. So if you don't get my money, then you would die, right? So you then lose the negotiation, you then lose the leverage on your hand. So you usually at least fundraise, a year before your runway dries out. your actual runways dries out. And then a lot of startups, they actually would have like a secret runway where their funding actually will dry out a year later, but then when they start fundraise, they tell the investor, oh, I actually only have 6 months runway left, so that's why I started fundraising right now. And then you start warming up the investor, and the things actually comes around. It would actually take like half year. Yeah.
It's always longer. I can see you nodding. And Andy, with Sprout, I mean, just the whole more ESOP type of placement. I mean, when we talk about going and talking to institutional investors, how does that work in terms of, say, you're thinking of hiring as part of the fundraise, or you've already got staff? How are you engaging? I mean, what are you recommending as you work with, founders?
Yeah, in general, I think for us on the platform, the glue to everything for fundraising, for employee share options is the cap table. So the cap table is really important. It's basically, for those unfamiliar, it's a snapshot of all your investors at any given point in time. It has, and you can group them into like investors or founders and different types of shareholders. The thing that we also provide on Sprout is virtual data rooms with access tracking, so we can track, when Yina goes in at what time, and she looks at what document. And, I actually we used it for our own fundraise, and I knew that this one associate on a Saturday night at 7:30 was looking through our documents, and so I know he was serious. So then I started texting him on WhatsApp and said, oh, by the way, you're looking. No, he knows. We were just.
You're like remarketing.
No, we're
like a pixel.
And I said in advance, you're going to be looking through the stuff. I will know when you go in and you open stuff or you don't open. Yeah. And then I was giving them play by play. I'm like, okay, this you should know that A, B, and C. And we also have scenario modeling. So you need the cap table to then fold in the impact of investors and their money. And the impact on dilution. And we also have a tool that can play out an exit so that you don't have to build a very complex model that I'm sure Yina can do with her eyes closed. And we really leveled the playing field, demystified, and made it really easy for people to just plug in a few numbers like pre-money valuation and investment and maybe your ESOP percentage, and then it will just magically crank out, what that impact looks like. And so with those tools, as part of our, this is what I really personally enjoy. I sit down with the founders, and if they need help, they and I sit down with them and I say, okay, don't raise too much. You're going to get blown into oblivion, and here's the output. And then your data room should really tell a story. And that's something I personally learned that when I first just threw a bunch of stuff in there, and I'm like, I'm doing myself a disservice, right? So we started to think about themes. Okay, we need to show growth. We need to show that pipeline is building. We need to show that customers are getting bigger, and et cetera, et cetera. So you start thinking about, in fundraise, it's more than just a conversation. And yes, I totally agree. You got to start early because, I actually tell, you start with that, that coffee. I want to get your feedback, even before I'm ready to fundraise. And if you walk backwards from that point, I'm ready to fundraise, that's another 3 to 6 months, right? Where you just say, hi, I'm here. Here's my startup. We're not raising, and it's actually really good to do the fundraise, right? Where you're just saying hi to investors. I'm not raising any money. And they're all like, oh, when you're ready, let me know, right? Yeah. You want to kind of get to that point versus, and it's sort of this phrase, right? Banks will loan you money when you don't need it, right? Investors will give you money when you don't need it. So it's super important to build that business, get that traction, product market fit, and so then it makes it easier to get the loan, to get the term sheet.
I mean, we talk a lot with founders. That you've said such an important word, which is going to sounds odd in terms of fundraising, but it's the storytelling. I mean, your pitch deck, you think it's 10 or 12 pages long, but it's what's the story you're telling? What do you want to finish off with? how have you played out? And I think that's what we forget. We look at, we've got to put competition in and pipeline and, all these pages. But actually, it's more than that. It's really, you should be able to kind of, talk about your business through those pages, that you finish with this element of FOMO, firstly, this hook that they want to come back and learn more, because that's really the first time they're going to see maybe some of your information in detail. So we're really big fans of storytelling. It's really thinking about that. And to the point of starting early, I mean, things like LinkedIn are your friend. You should be on LinkedIn already, kind of just reaching out to people that might be of interest to your business in the industry, letting them know you're there. And then we've worked with one founder and still sends out this great, very simple email to anyone she's engaged with in a broad fundraising sense of, thank you to whoever's helped me this month. This is what's happening, and I've got some asks. I'm looking to hire someone because we're expanding into a certain country. And it's just a few bullet points, and it's gold. You open it up because you're like, oh, okay, I want to see what's happening, because it's nice and simple. So you can start that early on if you're starting to engage. Don't wait until you're officially fundraising. Don't wait until you've got an investor. Start engaging as early as possible. Eugiena, I'd love to hear the snapshot of women you're seeing come through the programs with RAW, and even if you can share with the Entrepreneurs Fund. Either if by country, but like certain industries or scale. What are we seeing?
Yeah, so I can certainly share the raw side. On the fund side, I'm afraid that's confidential. But certainly from the raw side, of course, if you don't ask, you don't get. Yep. So on the HSBC Raw program, I was really fascinated to see who would, we put something out there for what's going to happen, right? Who's going to be interested in this? And really surprising mix of industries, quite a lot of tech, consultancy, and consumer goods. So I think consumer goods is one that probably seems, most obvious. I think we think of some of the bigger name, women who have made it, and a lot of them have led consumer brands. So that one's been really interesting, particularly around in the UK. So the fund of RAW is in the UK. And in the US, it's been very tech and services, which perhaps isn't too surprising given sort of how healthy the support is for sort of tech startups over there. But certainly a really rounded mix and some really cool businesses, some incredible like pet food brands, or sort of, these programs that I think if you put that into sort of any very over-bureaucratic local government processing to apply for forms and things would revolutionise it. So there's been some really cool ideas and women who are, on their fundraising journey and doing quite well. So
I think what's interesting about that is, we've mentioned it's on the board over there, only 3% of funding goes to women, and that's actually dropped off, that number actually since COVID started. And what people don't realise is actually if you break that down further, that the majority of that 3% goes to businesses that are kind of assumed to be stereotypically female. So when you start looking at gender-neutral businesses or very deep tech businesses or things that aren't expected to have maybe a female CEO or do not have a lot of women in that industry, that number gets, far, far, far smaller. And so I think that's why it's always interesting to see what are we seeing coming through, and, in terms of your programs and Yina, with what you're doing, what do you see are the barriers for women in, say, this, the non-stereotypical areas? Because we want to help all areas, but, with your focus on deep tech, what do you see as some of the barriers for female founders?
I think actually it's not just like particular for deep tech, because, for deep tech, it also has another area of barrier, which, the pool of STEM, female in STEM is already very limited in terms of education. So it's like it goes to another problem of, the whole education system and stuff like that, and promotion of, female in STEM field. But then in general, I would say there is another company that I run. It's called Women in Work. So we do a lot of female networking events and also, female entrepreneur startup, D2C brands kind of support. And then from both sides of the world, what I see is actually in general, female have a lot of behavior that we observed are quite different from male. And then sometimes we don't actually know how to, put out our qualities or how to show all of our qualities And in return, we are trying to imitate the successful counterparts which male are doing, but sometimes it does not necessarily work for female counterparts when you are fundraising or when you are presenting, when you are pitching to an investor. So I think that's really, for example, like some behavior, some traits are like, the networking style of female is actually quite different from a networking style of a male. Yeah, or a group of male and a group of female. So female are a lot more collaborative, less competitive. So whenever you're going to networking, like female are usually way more humble. So especially in a you can imagine a setting of where investor and some other investor people, folks like probably in that group, and then you are also one of the people in that group. And as a female, sometimes you tend to, playing a little bit low, and then, be a little bit more humble. And compared to a male founder, on the side, like he might be very good at showing himself, like what he has achieved, what he has done. So it's quite a different to actually make an impression from a female founder to an investor at the very beginning. And this is like, the very first impression. And then at the later on stage, when female are actually, so after the networking part, when they are actually growing, reaching out their network, like reaching out to some other counterparts or like managing, they tend to be a little bit more softer compared to male counterparts. So when you're actually like fundraising or negotiating, so you tend to be softer, so sometimes as an investor, it might not be showing that kind of confidence level that investors are looking at. But from my experience or from my view, like how to solve all these is basically like, turn them into your assets. So, trying to show that you are actually collaborative, trying to show that you are actually, manage well with your soft power. You actually like, could manage better than, male with your, with actually, your tone, your style, instead of following through, what male is actually doing. And I think that would, lead you to another way of success. And I think that's typically what, what female are facing.
I think you touch on a really good word there, which is confidence. And one of the things that when you're fundraising, sometimes it's not confidence, it's about being convincing. And this is actually, I think, a really important word for everyone fundraising. And I think it's not one we think about enough. But if you are going to meet an investor and they've met 10 other pitches that day, or they've been, they've seen a number of pitches this week. I mean, they want you to convince them why you're the one they should give their $100,000 to, their $1 million to, their $5 million to. And I think that even if you're confident, it's, are you convincing? Are you saying, I'm the one? Give me the money because I'm the one that's going to achieve this, execute, and deliver. And I mean, I think that's a huge element that is really important to think about is your confidence, but it's your conviction. Because if you can walk in and say, I'm the person, I was about to say I'm the man, wrong place. But if you can walk in and you've got it, I think that's a huge bonus for everyone when you're fundraising, and something to really think about when you're going through that. So, I mean, just one more question. On what would be the one quality you look for, regardless of gender, in terms of a company you invest in?
So one term that I learned recently, it shows really, really important is coachability. So there is one portfolio, like a few portfolio companies of ours that actually have gone through, it has been working with years with me. So both in different companies and both got replaced. And just because you're not coachable and they don't take advices. And, they are from both different genders, like, one female, one male. So regardless of gender. So it actually saddened us quite a lot, but the whole board and also employees, they all agree to basically replace them as CEO and CTO on the other hand. So I think coachability is really, really important, especially if you're working with your partners, no matter it's investor, vendors, employees, whoever, it's taking on other people's advice when it's needed. It's so important.
Okay, Fantastic. There you have it. If you're talking to Yina, make sure you slip that in, okay? Now, Andy, we actually first met through AngelVest, which Andy is a member of the AngelVest network. We met through Christine Ho, who is the Hong Kong chapter head, and it's a great network based here in Shanghai. Just putting your AngelVest hat on for the moment. What do you see are the top 3 qualities for a business to scale? What makes that difference?
That's a good question. I've been thinking about this for a couple of days since you posed that question. It's more like, where do I start versus, and if I had a force rank, I think that's where you guys don't want me to keep going. So if I had a force rank to go from startup to scale, I would... Okay, this is all kind of pretty close, but one is your addressable market. It's got to be big. It's got to be big enough to exhibit scale. If it's a very niche business, you can still make a lot of money. One of the things we talk about in Web3 is this is a brave new world where you do not need a gigantic market. You can sell tokens that could be worth 10,000, 50,000, 100,000 each, right? And so you don't need to hit Facebook scale, Google scale. But I saw a really interesting video where Elon Musk, he goes after the largest possible markets. He started with PayPal, and then that's money, right? Then he did cars, right? One of the largest industries on the planet, and now he's going to space. So, so I think those are pretty large opportunities. So that's one. 2 is hitting scale. As an angel investor, I look at the founders make a big difference. So experience makes a big difference. Have you done this before? Have you taken a company from 0 to 1, or you're just kind of making it up as you go? So team makes a big difference, especially when you're investing early on. And that is also the trigger, I guess, the pivot when they go really big. And a last piece, and I can't, and so this was really hard for me, like which is higher or above, but you need to have a product or service that can support scale. As in, if you threw 1 million people all at once, everywhere, everything all at once, right? Into this product or service, would it break? Would it break your servers? Would it break your code? Could you support it in the hour that matters? I'm sure you guys might have heard, some of these fly-by-night kind of stuff. Like, do you remember Flappy Bird? Remember that game, right? As soon as it hit some scale, it kind of crashed and it broke. And there's so many stories of products and services out there that as soon as too many people got in, it broke. And I think Clubhouse was one of them. Everyone raced in. Do you have a Clubhouse account? Can you send me one? And then as soon as it hit a certain level, it broke, right? And so in order to be scalable, and Uber had the same issue, is you need to have the infrastructure or the architecture or some process that enables the scalability of the business. Again, if you pumped in a bunch of people, customers, whether you're B2B or B2C, could you support that growth? Those are the kind of 3. And the way to find out about that is, you don't have to be a technologist. You just have to kind of go through the product. You have to get really deep into the product or service and really use it and look for signs that this is not well thought out, this is a good process, this is not a good process, and be meticulous as an investor to try the product, not just kind of take the founder's word for it. Try it out. Yeah.
I think we've mentioned it earlier, but you've just hit it again, as the product market fit. You've got to continually iterate, you've got to go out, you've got to find out, because you may have a problem solution, but it's really your product market fit is where you start peeling back the onion. I mean, you've really got to be looking at that, because that's when you start talking scalability, repeatability in terms of that. And I think, I know we are talking scale-ups, but I think hidden in that was also think about the type of business you want to build and the funding you're looking for. Because as you said, you can build a great business and not get funding and have a great business. And, you know, or is it that you want that scalable business? I think also asking yourself what you're committing to is really important. Eugiena, I just want to finish with one final question just for you. In terms of meeting all the founders coming through Raw, I mean, what's the one tip that you would give a female founder if they were starting out, and, you know, your learnings from seeing what they're doing in the Raw program? I mean, what's one thing you'd recommend founders do when they're starting?
I think ultimately it's trying to identify what you don't know and then be really specific about going after and finding those answers. So if it's anything from, say, financial knowledge, so say if you're not really clear on the spectrum, really try to understand what that is, because there's so many options out there, and there are people who can help you. And I think it applies to sort of any area, whether it's your marketing, whether it's networking, suppliers, logistics, whatever it is that you don't know, go out there and try to find that knowledge gap. We had a Michelle Corderio Grant who founded Lively Underwear, which is a D2C brand in America, and she sold it, I think, a couple of years ago for about 150 million US. And she said on her very first day, she sat down, she quit her job at Victoria's Secret, she sat down in a cafe, a notepad, and was like, I'm going to make this brand. And she wrote a list of everything she didn't know. And I just thought that is the most daunting and smartest thing I've ever heard anyone say about starting a business, because the help is out there, and you know, if you go after it and raise your hand and come and speak to people generally, and I think there's probably an element of women as well, when someone comes and asks you for help, you want to give back, you want to help, you want to answer. So there you are.
I think that's great. And I think Hong Kong is one of the most amazing places to ask. Everyone will always meet with you and I think help out. So I think I've always found that in my journey. I've always heard that from founders I've worked with. So I think that's one of the most amazing things about Hong Kong is the ecosystem here is really friendly. So if you have a question, find out and ask, and find someone to ask, because I'm sure they'll meet you for the coffee or a Zoom, you know, whichever one it may be. So, well, thank you very much for sharing all of your insights. It was really powerful and fantastic to have you up here. So I want to thank you for your time tonight.
Thank you, Nicole.
Thanks for having us.